Hey guys, I just want to bring up an opportunity for resource investors. If you want to rub elbows with the big wigs and talk to companies directly that are handpicked by Rick Rule, well, you got to be in Boca Raton from July 7th to 11th for the Rick Rule Symposium. The event has become a premier event in the mining space, and they're going to have some pretty big speakers like Robert Friedland, Sean Rusin, and the great Rick Rule. And also, we're going to be there. You can meet the Deep Dive team in person. So if you're interested in rubbing elbow with some of the biggest heavy hitters in junior mining, check out the link below. Good afternoon, everyone. Today I'm chatting with Adam Cegielski from First Nordic. In this interview, we discuss how both politics and central banking seem to be putting gold in an attractive position with many investors and people just looking to protect themselves as governments continue to spiral further and further out of control. And we get into Adam's company, First Nordic, which is particularly interesting because it's one of the few mining companies in the public markets that's focused on Sweden. Adam tells us how the company came to be, what they're exploring for this summer, and what the long-term plan is for the company. All right, everybody, enjoy the interview. Adam, thanks for joining us today.
Steve, nice to be on the show. Thank you.
So gold's had a pretty good, we'll say 6 months or so. I know that's come back a little bit from hitting $2,400. What's your read on the gold market right now? Do you follow the macro very much, or to you is it just sort of noise?
No, I follow the macro. I'm a diehard gold bug, by design. I've been in the gold business since the early 2000s. So, I saw the original run, from $200-300 gold to $2,000 gold, and I was part of the excitement and the success when gold went to 2000 and settled back down. So I've experienced, a proper gold run. So, I was kind of waiting for this to happen for the past decade. And, as most people in our industry are completely exhausted by waiting for the price of gold to go up. So I'm not surprised it's taken longer. We've printed so much money, and I think there's no solution to the monetary situation right now, aside from sort of a revaluation of gold and assets. And I just don't know how we get out of this debt bubble that we're in. So I think gold's going to $3,000 an ounce. I think it'll probably run beyond that. But, all the companies we talk to, all the majors we talk to, all the analysts I follow, everyone's starting to see that, this price of gold is real. And, we still haven't seen it really reflected in the stocks. But yeah, I'm very bullish on the price of gold. And I see better times ahead, and especially for the equities to catch up.
It's a scary time, isn't it? Because you mentioned money printing, and that's always a theme. But what's happening now is particularly interesting, where we look at the US, where they're basically at full employment and they're running large deficits, or even here in Canada, where we're running large deficits during a time of inflation. And it almost makes you kind of wonder if governments are just way past the point of caring about budgets and whether or not they balance, and I'm not sure if are you Canadian based?
Canadian based, yeah, Toronto.
Canadian based. So something I talk a bit about just with friends, and not that I really want to navigate this conversation into politics, but when Justin Trudeau first ran, the Conservatives ran those ads, the budget will balance itself, and I think a lot of us kind of rolled our eyes as like, oh, this is just political rhetoric. And, 8-9 years later, we're now kind of looking around and going, geez, that quote couldn't have reigned more true. And we look at what's happening in the US, like I said. Do you think that we're now kind of hitting that point where this is sort of the end game? And secondarily, what do you think needs to happen for more retail investors to start to go, yikes, how do I protect myself given everything that's happening in the world?
Yeah, great point. And, as reflection on that, when we were first getting excited about gold in 07, 08, 09, you had this big debt crisis back then. You had, a big bank collapse. So you had this massive fear event. And, back then, I think Paulson printed $750, billion. And that was the start of quantitative easing. And that was like, oh my God. And gold just ran. And because you had this big bank failure, Lehman, and you had these massive losses, it created this huge fear. And today you're not seeing, you're seeing some of the small banks go under, it's more of a regional story. And you've got the tech market doing really well in AI. So it's like people are kind of oblivious to the fact that I think Biden in his first year printed $4 trillion. And I think since then, that number is somewhere between 8 and 10, I believe. I've lost track of the trillions of dollars that have been printed. So yeah, it's quite amusing here in Canada to see what's happened with our situation in general, with the government we have, and again, you've had this left central government that's been focused on environment and focused on equality and all these things during COVID that today are really biting us and hurting everyone's bottom line. And whether it's the carbon tax or whether it's the cost of food inflation, we used to measure everything by bread. What does a loaf of bread cost? And that really tells you what the reality is. So, I'm very optimistic for gold. I think you nailed it when you said it is a scary time. Most people are getting excited in the gold space, but really gold going up is a sign of some bad things that are brewing. And it's going to be good for our sector. And I think before you really get excitement in the juniors, I think we've got to see gold, go to $2,600-$2,700. You see the majors. I mean, look at Agnico, one of our partners. Look at their stock. It's gone up from $60 to $90 since January. And once you see quarter after quarter of increasing free cash flow on those producing ounces, that's really when I think everyone wakes up. So when Agnico is looking for the generalist investor to come in and feed their greed by coming into their gold stock, I think that's a good start. And eventually you get a trickle down into the mid tiers and into the juniors. So I think we're still far away from that moment. I think you guys are in the States, right? You've got an election coming up this year.
No, we're the deep dive is Canadian based, so I'm actually also in the Toronto area.
Okay, good. So I wasn't 100% sure when you asked about me being in Toronto. So okay, so the American election I think is a huge catalyst for the price of gold here, right? If Trump wins, then let's see what happens. If Biden wins, I think it's even worse. So I think this is going to be an exciting year, and the fact that gold is 2,350, 2,400, and nothing's really happening in the gold space. Like, it's a very weird market. You've got certain gold stocks overperforming and you've got the rest of the market getting crushed. So it is a weird market, but quality stories with hardworking teams are sometimes getting the right kind of traction. And we happen to be in that camp right now.
I'm a believer that when I look at sort of what's happening in the world with, we look at what happened in Panama with First Quantum. We can take a look at sort of how Adventus, whose stock has done well, but the bottom line is that nobody wanted to fund them because they ended up having to do a deal with Silver Corp, which pretty much any self-respecting investor I know doesn't think too highly of them. It tells me that there's just not a lot of interest to fund commodity projects right now around the world. And I think that the only cure for this is going to be higher prices. Now I know gold's a little bit different because it's more of a it's more of a I'm going to protect my assets kind of trade. But if we're talking about silver, which is definitely used in production of things, or we're talking about copper, which basically is required to electrify the world, it looks like, just from my viewpoint, that we're going to need to see higher prices in order to give more cash flow to the communities that are not allowing projects to move forward. And this is just my view as somebody who works in mining and follows mining and writes and makes videos about mining, that the only way that we're going to be able to meet the demand of what the world needs commodity wise is if more mines go into production. And the only way that more mines are going to go into production is if prices go materially higher. Yep. And I don't think that inflation has hit us yet. In a lot of stuff you read from analysts when they talk about the price of copper, and I know we're not talking about copper here, but they're pretty modest in where they think it could go. I think that we haven't seen that side of inflation hit us yet, and it all impacts us in the mining world, where we're not seeing a lot of capital want to flow into projects, and it does feel like stuff is picking up a little bit, but certainly not to the level that we need to meet the world's future energy demands and just needs in general. What's your thoughts right now on the amount of capital that's actually flowing into the junior mining space?
I mean, I think you're seeing lots of new capital in junior mining, but you're seeing equal, if not greater than outflows. So whatever new capital
Yeah.
is coming in is being matched with outflows, and the net is zero. You're struggling to find new buyers. Good projects are going back to the same shareholders. There's limited new money coming in. There is some new money, but some of it is a little bit maybe quicker money, hedgy money. So it is a challenge to find new quality money. We're always looking in new areas. We're in Sweden, so we plan on listing in Sweden eventually, and trying to find capital in Europe and maybe the Middle East. So we're hoping you see that capital, but I think you're 100% spot on. Higher prices solve this problem. And when you're seeing copper hit, what was it, $5 a pound there a couple weeks ago, gold 2,500, and the equity is really doing very little. It's a very good sign that we've got a long way to go. We're early in the cycle. If you just look at production numbers globally, discoveries, I mean, where are I remember the days when you can, 2 million ounces discovered here, 3 million ounces discovered. It was a very healthy exploration market, new discoveries, lots of entrepreneurs doing this. And right now what we're getting is, a lot of companies dying, a lot of projects having to merge. We're kind of the product of two companies that were both finding it difficult to find capital and happen to be next door to each other, and said, listen, let's join forces and save each other the trouble and focus on one story with one group of investors. So yeah, higher prices are going to fix this. And just look, I started in this 20 years ago. Gold was $250 an ounce, and back then they said, oh my God, who would think it would be $800 an ounce? And here we are at $2,400 an ounce, and people are calling for $10,000 gold and $20,000. Jim Rickards is saying $27,000 gold kind of balances everything in the States. So, we talk to our partner companies. They're seeing, all the high grade deposits are gone, all the low hanging fruit is gone. So all this environmental consciousness and protecting the footprint of our environment, underground mining is becoming far more important versus open pits. And yeah, I think we're going to see prices continue to rise. And I think if prices keep rising and you still don't see inflows of capital, then they have to go higher. And ultimately the earnings, the quarterly earnings of those larger companies, when they start pumping out major cash flow. And if you just look at, if you're making 1 million ounces a year, every $100 in price of gold increases your cash flow by $1 billion per year. So 2-3, you're talking about multi-billion-dollar increases in cash flow above and beyond the growth in the market cap. It's very, very exciting. So that'll happen. It's slowly starting to happen. And, we just have to, companies and entrepreneurs have to be very creative in how they capitalize their companies, how they build relationships with the local governments, and merging companies and doing creative deals are the way to create value quickly, get bigger without diluting. And that's sort of been our focus.
So let's talk about First Nordic. We had Taj on recently, but for our audience that's new to the story, maybe you could walk us through how First Nordic came to be, how you got involved, and just high level, sort of what the company owns and where it's at, and what the focus is.
So, I was talking to Eric Jensen this morning from EMX Royalty, and it kind of goes back to, his original thesis. He's the one that him and EMX staked the Gold Line grounds back in 2016. They've been in Sweden since, I think, 2005. Their offices are right on the Gold Line belt. And, he, who's a brilliant geologist, said, this is underexplored. This is virgin territory. Sweden is like Ontario, Quebec, 80, 90 years ago. And, Sweden only opened up to foreign capital and modern exploration sort of in the late 90s. Long history of great geology and mining, but it was in the late 90s, early 2000s that all, this whole area started to wake up. And then eventually EMX grabbed these projects in 2016 at the bottom of the gold market. B2 Gold had some of them, Orion had some of them. And they put this package together because it just was a bear market opportunity to grab, 90,000 hectares on a belt. And so I came in as CEO in 2019-20 to take it public, and we took it public. We started to do some early exploration. We made a discovery. We got some major institutional support, and then the war started, and you had another crash in the gold market. So as history tends to repeat itself, prices go up, prices go down. And eventually I found and got to know Taj through some other business we did in another sector. We happened to live 10 minutes apart. We got to know each other. And I said, listen, you've been super successful. Here's a really exciting opportunity. We own this entire belt. And right in the middle of it is this Barcelay deposit. And I convinced Taj to come in based on the gold line projects. Taj came in. And since then, the merger happened, and First Nordic is sort of the synthesis, the merger of two great land packages to create this 100% owned 100-kilometer belt in one of the best mining jurisdictions in the world now.
How many publicly traded companies in the mining world are like concentrated on Sweden?
Very few. It's that was part of it as well. Is some of the a banker in Vancouver that was him and Eric said, listen, there's very little exposure in Scandinavia, right? It was, I don't know the number, but it's very, very small number in Sweden, more so in Finland. So Finland's maybe, a little bit ahead with respect to, Agnico's big project. Kitla is well into production. All capital costs are there. Rupert Resources has become sort of the belle of the ball in Scandinavia. They're at like an 800 million market cap, an exciting 4 million ounce discovery. So you've got, guys like Orion and some of the Finnish companies have been, beating the drum of Scandinavia for 8-10 years. And Sweden switched governments to more of a right-wing government last year, has opened up and permitted a few mines. And you're seeing a lot of capital starting to flow into Scandinavia. So I wouldn't be surprised if a couple $1 billion of capital flow into that jurisdiction, especially what you mentioned, Panama and what you're seeing in Mexico now. And tenure is so important. Governments, good government jurisdictions are so important. Energy costs are so low. So I think you're going to see, if you see, if Rupert goes for $1 billion and gets taken out, then you're going to see a major push into Scandinavia further. But people are calling us weekly to look at some of our projects, help identify new opportunities, and we've seen a lot of inflow and a lot of interest in Scandinavia over the last 6 to 12 months.
So you guys recently released results from a large glacial till geochemical program. What can you tell us?
Yeah, so what's different here, just high level, is all the mineralization is very similar to the Abitibi. These are orogenic systems that are covered by glacial till. So unlike what you would see in Ontario, where you have outcrops and you can do chip samples and you can follow, Sweden is covered by this glacial till. A lot of Finland is as well. So you don't really see anything at surface. You need what you call boulder hunters, and we've got a few of these guys on in our team in Sweden. And traditionally, these deposits have been like glacial boulders that have been rolled down for millions of years. The anomalies you see at surface are really just a function of the glaciers come down, they pull back, they come down, they pull back. So you can kind of get a fingerprint of what's happening historically and where that gold may be. So when you find big, huge anomalous, gold or polymetallic systems, it's pretty exciting when you got a 4 or 5 kilometer, system. Something is going on there, whether it's 20 kilometers to the north or not, you don't know. So what you do is you get this geochemical information, you align it with some geophysics to see, with Goldline, we own 100% of this first order structure. So this is the main geological structure that's created this system. Barcelay deposit is on it. Dragon Mining has deposits on it. There's discoveries in the north, and they usually happen within 4 or 5 kilometers of that structure. So when we're seeing a 5-kilometer surface structure, we know it's structurally controlled by geophysics. All we have to do is really drill to the bedrock and do those short base of till drilling, which we announced on Monday, our best base of till result. What that's telling you is you've got this signature on the surface, you've got the structure in place. Then you go and you do your underground chip sampling, and you go find 4 or 5 grams per ton. There's a mineralized system there. The question is, how big is it? How deep is it? How long is it? And in the Pawbacken project at Aida, which was the discovery I made, that's a 5-kilometer structure in place. That's 5 kilometers that we've now proven over 2 kilometers of it is mineralized. We did like 1,000-meter step out and found mineralization to the south, another, almost under 1,000 meters. So those are big step outs that we're scratching the surface, very, very much like Rupert Resource did. They found, the geochemicals on the surface. They did these bot holes, and then they go and they find these shoots. And you basically want to hit those shoots, and then underneath that shoot, it either pinches and it finishes, or it swells, and you have these big ore bodies. And our understanding is that the belt has got lots of deposits along it. It's whether they're really deep or near surface. So, 30 kilometers south of where we are right now is another 1.5 million, 2 million ounces. Where we made our discovery, there's an operating mill that mined out 400,000 ounces. You keep going up the belt, you run into 2.5 million ounces with Barcelay. And again, we're only 400 or 500 meters down on some of these deposits. These things could go for a couple of kilometers. So early indications, but really exciting. And to give you an example, I made the pawback and discovery on my third drill hole. So, we were in a campaign. I've only done 1,100 meters of drilling at pawback, and it has not even had virtually any drilling compared to, let's say, I think 155,000 meters at Barcelay. So, we're early days at these targets, but to find 3 or 4 of these multi-kilometric anomalies shows that this has the potential to be a camp that has 2-3 different deposits on it.
Might be a silly question given your current valuation, but I'm going to ask it anyways. Given how the regulatory environment works in Sweden, would it ever make sense for you guys to look at trying to become like a sort of a small scale producer? If there's a mill in the area, is that sort of something you guys are contemplating, or is the idea here to prove out a bigger system and work with the major?
Yeah, listen, we've got Agnico that owns 55% of Barcelay, so we're 45%. And now we've got another 80 kilometers of strike to go and test. So, it's always cleaner to just prove something out and build it and sell it. But, again, we talked about capital, and capital is scarce. So Agnico's put $55 million into building out the resource. So they're going to want a significant amount of capital if they're going to sell it. So at some point, we're obviously talking to them always. They're great partners to have. We would love to be able to get control of it and advance it. I'm sure Taj talked about that. Historically, that's obviously what we were trying to do. But, when you've got an operating mill right beside a discovery, like, you don't have to go find 2-3 million ounces. You go find 200,000 ounces, and that's worth hundreds of millions of dollars. And that's worth a lot of money to the company that has the mill. And that company that has a mill, maybe doesn't do as much exploration as we do. Maybe they're focused more on production. So, yeah, there's, right next to the Barcelay deposit, someone found 30,000 ounces, and they got a mining permit. They're called Botnia explorations. They got a mining permit, and they're going to go mine 30,000 ounces. Okay, we have over 3 million ounces, basically. So, it's tempting when you look at, they're listed on the Swedish stock market. They got a $50 million market cap, and they have 30,000 ounces in reserves. So, it makes you scratch your head a little bit that maybe it makes sense to go down a path of partnering with some of these companies and using the cash flow from that operation to pay for other acquisitions down the road. So you got to be creative. Taj is an incredibly intelligent deal maker who is looking at all scenarios. We've got wonderful relationships, and we are watching the small producers. We're watching the plan. The cleanest way is to just consolidate everything, and I think that's really the opportunity. Markets are not paying you for just being a great company that doesn't have a lot of money. It's really tough to get high valuations. But if you can merge, if you tie on some other partnerships along the way, you can grow. And next thing you know, you're 200-300 million market cap on your way to $1 billion. And it's a lot easier to raise $50 million when you're a 200 million market cap than when you're 20, So it's all about momentum. It's all about growth. And I think consolidation is a real exciting opportunity in this jurisdiction specifically. When you've already got a 100-kilometer belt, you already have a partnership with one of the largest mining companies. There are other opportunities on the belt that we are looking at, and at the right times, maybe something happens there.
So what does exploration look like for the remainder of 2024? Are there going to be drills in the ground? What are we watching out for?
So we've got a warrant incentive program right now. So we're offering our shareholders a bonus warrant for exercising their warrants early. They're in the money. So we're trying we're trying to bring in, millions of dollars to go and drill the projects without going to the market. We do not want to go raise money at these levels. We think our stock is undervalued still. Barcelay and Goldline at one point had a cumulative market cap of almost 300 million, and today we're about 60. So, we believe we're going to get capital from our warrant exercise, which is going to set up exploration. We're going to, summer months are great for doing low cost exploration work with students. So we're initiating some work there that we're going to update the market on. We're going to get more sampling, get tens of thousands of samples to keep that geochemical target development going. The bot drilling is a very easy way to go, develop targets further. And that's, some of our projects, you can do that in the summer, some you do in the winter. And really, Taj joined to go drill Pawbacken. Pawbacken is at 1,100 meters and is a larger structural target than Barcelay is. And it sits within 4 kilometers dirt road access to an operating mill. So the goal is to go drill Pawbacken, to go continue summer work and just spend money on the projects that we own 100%, because we build value that way. We create news flow, we create excitement. And, that entices Agnico to watch what we're doing a little bit more closely, maybe, and appreciate the fact that we can advance these projects. It's just, you don't want to raise too much money at the wrong valuations. And then at the same time, you don't want to raise too little and then have the market fall apart. So I think we're doing a good job bringing warrants in right now that fund the company. And at some point, we will go to the market, but not anytime soon at these prices.
All right, Adam, final question for you. Is there any thoughts that you want to leave your investors with, or potential investors with, who are watching the story?
Yeah, I think you're going to see us capitalize the company here through our warrant incentive program here. That's going to fund exploration work and further drilling. We have lots of exciting discussions going on with a lot of the people in the area in general. And we continue to make progress with our partnership with Agnico and hope to see some positive results out of their drill program. So you can see a lot more news to come. You can see exploration building for the fall. And I think we have a gold market coming in the next 6 to 12 months, and the cream of the crop will rise, I think here. And when you got a base of 2.5 million ounces and you got 100 kilometers of belt to explore, it's a pretty exciting situation to be a part of.
Well, Adam, thanks very much for hopping on here. I think you guys have a very interesting story, and as the gold market continues to gain some momentum, I think that names like yours that have significant resources in the ground are going to gain more and more traction. And hopefully you guys can keep coming back on here as we continue to see you guys execute on your strategy, and the gold market continue to gain momentum.
Wonderful. Thanks for having me. Much appreciated.
All right, everybody. Thank you for watching. If you enjoyed this interview, please smash that like button, subscribe, and ring that notification bell. Also, let me know what you think in the comment section. Thanks, everyone.